Hi there, welcome to Kneppy Invest. Time for my weekly technical update. In this video series, I just look at charts, and more charts. If I spoke to myself about 10 years ago, he'd probably be horrified that I would just be looking at charts in this video series, because back then I didn't really care about charts. It's all about the company, it's all about fundamental analysis. I have changed my tune a little bit because technical analysis, in my opinion, is actually really important for all, or should be important for all investors. And in my opinion, this is just my opinion, if you completely ignore technical analysis, just like if you completely ignore fundamental analysis, I think you are missing a part of the story. And I think you could grow and be more successful if you understood that part, either fundamental analysis or technical analysis, that you are ignoring. There are both sorts of people, those who absolutely ignore charts and those who absolutely ignore fundamentals. In fact, those who ignore fundamentals call it fundamentals because it has no saying on the movement of the share price up or down. I actually disagree with that. Now, this video is not a rant about fundamental analysis versus technical analysis. They both have their advantages, both have their disadvantages. But over the last 5 years, I've tried to mirror the two. And I have found that I have become a more successful investor by mirroring the two. So in today's video, I am going to look at 8 charts of ASX companies, including Kogan and 7 others. And the reason I'm looking at these charts are because they're pretty interesting right now, not for all good reasons. In fact, some of these charts are looking really negative, but they are interesting nonetheless. So the other 7 companies I'll be focusing on today's video include Auckland Airport, Objective, Intergrate Research, CTI Logistics, Talga, Chic, and Peninsula Energy. The majority of these companies did have an AGM during the week, and if not, they either released a profit upgrade or some other news flow from the company, apart from Auckland Airport. Now, Auckland Airport haven't released any news for a few weeks, but in saying that, there is some positive sentiment within that sector right now. Qantas itself did release a profit upgrade, if I remember correctly, and the chart for Auckland Airport is looking interesting right now. And because City Airport was sold, this is the only airport infrastructure company on the ASX. First company we're going to focus on is Kogan. I'll call this the motivation for me doing today's video was Kogan. When I saw that chart, I went, oh, things are starting to look more interesting for this company for a few reasons. Now, Kogan's share price was in a medium-term to long-term downtrend, and you can determine whether a company is in a downtrend just by looking at a chart. It's fairly obvious that Kogan's share price was moving down. Now, I've included 4 moving averages in this: 100-day, 75, 50, and 25. Sometimes I also include the 200-day. And the way I determine whether, very simple way, instead of just not looking at the share price, is just look at the distance between the moving averages. And from about August last year to about August this year, the distance between those moving averages, they're fairly spread apart. That's probably the best way to put it. The moving averages are spread apart. So if the share price is falling, that's a well-defined downtrend. What I want to see when a company share price is in the well-defined downtrend, I want to see the share price starting to move sideways. I want to see those moving averages starting to come together or converging. And we are starting to see that now with Kogan. So the 3 shorter-term moving averages have almost come exactly together. Now, I'd like to see those 3 shorter-term moving averages, 75, 50, and 25, which are now still below the 100-day moving average. I'd like to see those cross over above the 100-day moving average. That would be sort of the first sign I'll be looking at. Some other signs would be new highs. And when I say new highs, I'm talking about 6 to 9 month highs. Now, in August, when the Kogan did release their full-year results, there was some positive reaction from that release from the market. However, before that release, the share price of Kogan was in a well-defined downtrend. So even though the share price did increase by a fair bit, something like 30 or 40%, something ridiculous on pretty high volume, there was a lot of resistance meeting that increase in share price. The reason there was a lot of resistance is because a lot of those shareholders who bought at significant higher prices in the past, who saw that opportunity to sell out on that day in August when the company released their full-year results. And that's why the share price started to drift down. as all those shareholders who bought in the past, who now considered Kogan to be a dog stock because the share price fell after they bought, had their opportunity to sell out. And those shareholders are dwindling in numbers. And that's why when the company releases more good news, you don't see that sort of reaction we saw back in August. And Kogan did have their AGM on the 24th of November. The market did react quite well to that AGM, share price up 8%. Now, I have not had a look at the AGM and why the market reacted like that, but it did. So the market liked it. So the share price rose 8%, fell about 3% the next day, but the share price does look like it wants to break out. There was a little bit of selling on that date, 24th of November. So those shareholders who want to sell out, they're still there, but I think they are dwindling in numbers. So I'm just going to keep my eye on Kogan's share price and that chart because I think this is potentially a turnaround story in regards to the movement of the share price. You wouldn't be surprised to see Kogan move into an uptrend within the next 3 to 6 months, particularly if they release some really good financial numbers to the market. So close eye on Kogan. The share price is not in an uptrend just yet, but it does or it is showing signs of a turnaround. Next company I want to look at is Peninsula. I have owned Peninsula shares in the past, maybe 2 years ago, when the share price started to turn up. I didn't hold it for very long, maybe 6 or so months, because I'm still fairly nervous about uranium. And a lot of uranium stocks ran pretty hard. And in my opinion, they ran way too hard. So Peninsula Energy have a project in Wyoming called Lance. And it's a potentially intriguing project. Now, in saying that, they released a DFS, which is a definitive feasibility study, on the 15th of August for Lance of restarting that project because they could mine for uranium, but because of suppressed prices of uranium, that mine is not operational right now. So they want to know how much money they could get from opening up that mine. So that's what the DFS was. Now, the share price fell 10% on the release of that DFS. I had a quick look at the numbers, and to be honest with you, they weren't that impressive. All-in sustaining costs, $39 per pound. Net present value, only 125 million US dollars. So not a lot of present value or net present value in regards to that mine. Cash flow was a little bit higher than that, maybe at 4 times higher than that. So the market didn't like this DFS and the share price fell 10%. And then on the 25th of November, the company did a capital raising, a $32 million capital raising. And of course, because there was a discount to the capital raising, the share price down 12.9%. The main reason that was significant was because the share price moved below a really strong support level at 15 cents. So that was a very negative event for this company, with the share price moving below a pretty strong support level. The reason that was a pretty strong support level was because the share price had hit that support level about 6 to 7 times in 2022. And every time the share price hit that level, we saw a little bit of bounce. So unfortunately, I'm a lot more bearish in regards to Peninsula Energy for all the uranium companies on the ASX. This is without doubt the most bearish chart right now. It did look like things were turning around as uranium prices were rising towards the end of 2021. Share price of Peninsula reached a high of 35 cents. So a lot of positive sentiment at that point in time, but that positive sentiment has waned away, and that's why the share price is falling. The last time share price was this low, around about 13 cents, was actually way back in around about September of last year. So a 1-year low in the share price for Peninsula. Next company you want to look at is Auckland Airport. This company did not have an AGM. In fact, I think their AGM was towards the end of October. No news flow from the company, just positive sentiment driving the share price of this company to not quite a 1-year high, but about, we'll say at this point, 11-month high. Last time share price did reach, so the high in the last week for Auckland Airport was $7.50. The last time the share price was $7.50 was around about late November last year. So almost a 1-year high for this company. Now, the share price was sort of in a downtrend from November last year all the way through to October this year. You can see lower lows, lower highs, but the sentiment has definitely shifted from the lows in October. In fact, those lows were about $6.25. Now the share price is around about $7.30. Share price moved above a nice little resistance line at $7.30. That reason that was a resistance line was because of the highs we saw back in March. So the share price now has moved into an uptrend. Share price has reached 11 months, so I wouldn't call that long term. I'd call that a medium term high, just almost a 1 year high. I am looking for companies with a share price at least a 6 year high, where I'm talking about technical analysis. And that's the one thing I am looking for, at least a 6 month high. And the reason I'm looking at least a 6 month high is because of short term focus for a lot of investors. And if the company's share price is at least six month high, that means there's going to be less resistance moving forward for the company, because there would have been a few shareholders who bought into Auckland Airport in March. The share price, say about $7.20 or $7.30, saw the share price fall after they bought in. And then when the share price started to rise in the last few weeks, they saw their opportunity to sell out. Not a lot of volume over the past few weeks, but there is positive sentiment not only in this company, but also in this particular sector, particularly after Qantas released a profit upgrade. Next company we want to look at, or I want to look at, maybe you don't want to look at, is CTI Logistics, ticker code CLX. And this is an absolutely wonderful chart, brilliant chart, 2-year daily chart. And the share price has been an uptrend for the last 2 years, a well-defined uptrend. Probably the only problem with this company, well, the main problem with this company, is the shares are illiquidly traded. So you can see a little bit of volatility from day to day. But if you take away that day-to-day volatility, the share price has been moving up. It doesn't hurt. This company keeps releasing profit upgrades and that sort of thing. And that's exactly what they did on the 23rd of November, profit guidance announcement. And the share price rose 27.5% on the back of that profit guidance. You can see that massive rise in share price on that day. So they are expecting half-year profit to be up 60% from the previous corresponding period, and revenue up 18%. Now, in saying that, they were a little bit, what's a good word? They were a little bit wary about the economic conditions, not only in Australia, but probably around the world. So they just wanted to convey that wariness to their investors, but the market completely ignored that wariness. And that's why the share price rose 27.5% on the back of that profit guidance and revenue guidance as well. Now, if we call CTI Logistics chart the best chart in today's video, without doubt, the worst chart belongs to City Chic. If you don't know who City Chic do, what they do, they sell clothes to plus-size women. And for some reason, things are going wrong for this company. Now, this is not quite 2 years. This is almost a 3-year chart. I just wanted to include the COVID-19 period, because the share price of City Chic fell down to 75 cents. And I thought back then, this company was quite cheap. And then share price rose from that 75 cents to a high of $6.75, which was reached in October 2021, which was just over 1 year ago. So in the past year, in 1 month, the share price of this company has fallen from $6.75 to a current share price at around $1. So things are going wrong for this company. The company has released a few negative financial reports or updates. The first one was in February. See a massive down day on that day. And they also released a fairly negative update at their AGM on the 25th of November. Share price actually decreased 28.4% on that day. So this was a fairly negative update. So I had a very quick look. Why did the market react like this? Now, I have seen some other retail companies release positive updates, and we have seen a share price rebound. So for some reason, City Chic is not being successful in selling their plus size or their clothes to plus size women. Online sales down 19%. America's sales down 12%. So this company has stores in America, Europe, and also Australia. Australian store sales up 10%. But for some reason, significant decrease in online sales and America sales as well. And that's probably the main reason why the share price has dropped 28.4%. I'm going to have to have a closer look at the AGM and their presentation and what they're talking about, because the share price is moving towards those COVID-19 lows. So not far to go from here. In fact, only 25 cents a difference between those lows. And that would mean, because I do think this company is better situated now than it was back in 2000 or start of 2020. So if I thought it was cheap at 75 cents, I think there might be some value here at $1. Now, in saying that, a lot of negative sentiment behind this company, and you can see that negative sentiment has driven the share price of this company from $6.75 to $1. So who knows the future of this company? Another negative report from the company, and they could still release more negative reports in the next 3 to 6 months. They have their half-year results, should be released in February, so only 2 months to go. That could be quite negative, particularly if they do another trading update. So even though the share price is moving towards those COVID-19 lows, I'm a little bit hesitant taking a position in this company because I think there's value, just because of this negativity right now in City Chic. Now on to Talga. I don't know anything about this company. I should take a closer look at what this company does, because the share price has increased 27% in the past week. In fact, we saw 4 consecutive days when the share price rose 4.7%, 8.8%, 5.4%, and then another 5.8%. They had their AGM on the 24th. That was that on a Thursday? On the Thursday. So the share price rise was not because of the AGM, but they did release an announcement on the 23rd. On the 23rd, the share price did increase 8.8%. This was in regards to a debt financing, or the debt financing was advanced with EIB, which is European Investment Bank. So for some reason, the market really liked that. Maybe it put more validity in their project, and that's why the share price has moved up. The share price right now is at a 7-month high. So I'm looking for companies with the share price at least a 6-month high. Not only is the share price at a 7-month high, the share price has moved into an uptrend, and we have seen a positive reaction from the market. So even though I don't exactly know what Talga does, I've put this onto my watch list, and I might do a little bit of research in regards to this company. Now, if you look at the long-term chart here, it's not a long-term chart, it's a 1-year chart. Share price has really gone sideways over the past year. So we're really only looking at the short term with the share price movement, because there's probably few shareholders who did buy in between November and say May to June period, who bought in at higher prices, and they have seen the opportunity to sell out. And I think there is a possibility a lot of those shareholders who did buy in at higher prices, they're dwindling, they're falling, and that's why the share price has continued to rise over the past few trading days. So one of the more intriguing charts right now on the ASX. From one of the best looking charts on the ASX, from one of the most intriguing charts on the ASX, it's not the best looking charts, just intriguing to me because what's been happening with the share price over the past 4 days, to a chart that I'm looking at and going, I can see the share price falling below a pretty good support level. And this chart belongs to Objective. In fact, I did a financial year 22 result video for this company. Now, I do like what this company does. However, there are questions about the valuation. And the share price of Objective has been in a downtrend. That downtrend really just started towards the end of 2021. It started 2022, a real ordered downtrend. And the reason I say ordered is because if you put or connect the highs, those highs are sort of connected by a straight line, which is the up or downtrend line. So we saw the first high, or the first time it reached that downtrend line, was in early April. Second time was in August, and the third time was recently. In fact, in recent times, the share price wanted to get above that downtrend line, but failed. And then on the 23rd or 24th, we saw a bit of selling coming in. And then the company had an AGM and trading update on the 25th of November, and this was not a good trading update. And that's why the share price fell 14%. If we include the previous day, the share price has fallen about 20% in 2 days. Now, the reason why the market has reacted negatively to this trading update can be explained in one line that was released in the AGM or trading update announcement, and they refer to growth in revenue. So they are now expecting single-digit growth in revenue instead of double-digit growth in revenue, and that's the expectations of shareholders. And that is a bit of a decrease, because single-digit growth in revenue could be anything from 0% or 0.1% to 9%. And if you're talking about double-digit growth, That's more than 10%. So this is the reason why share price objective has moved towards this nice little support level at $12.50. The reason that's a support level is if we go back to June, that was the lows during that period. And then in October, sort of towards the end of September and start of September, the share price tried to get to that support level, but then we saw a nice little bounce. Now, really interesting, on the 25th of November, when the company did release that trading update, the share price hit $12.50, and then we did see some buying coming in. That's why the share price actually closed more towards $13 than $12.50. And the most likely reason why we did see a bit of buying coming in at that level is because it's a nice little support level, and there will be traders who know that $12.50 is a support level, and that's why they started buying at that point. So with this negative trading update, it wouldn't be surprised to see that support level of $12.50 broken. Now, I wouldn't also be surprised to see the share price hover around $12.50 for a while before it fell. But it wouldn't also be surprised that if it does hover around $12.50, and then when it breaks below $12.50 on strength, I wouldn't be surprised to see a significant re-rating in the share price after that point. And when I say re-rating, I mean to the downside, not to the upside. Now to one of the ugliest looking charts for a while on the ASX. That belongs to Intergrate Research. The share price of this company has dropped and kept on dropping for the last few years. However, there are signs of life with the share price of this company. Now, Intergrate Research share price increased 56% during the week, including 34% on the 24th of November. Now, interestingly, that increase of 34% on the 24th was not coinciding with the AGM. In fact, the AGM was on the 23rd, and they released their announcements for that AGM before trading began on the 23rd. So something happened on the 24th. Maybe some participants in the market read through the AGM, found something they really liked. Maybe that whatever they found was hidden, and they started buying the next day. This is really interesting reaction from the market. I have seen this happen a few times in the past when the major reaction was the day after an announcement. I'm not sure why. It could be because it takes a while for some people, some investors, to actually go through the AGM presentation, to go through the notes, to have a listen to what was ever said at the AGM. So the main thing with Integrated Research was the main reaction was the day after the AGM. I haven't looked at the AGM, but there must have been something in it. And that's why the share price has rebounded 34% on the 24th, and then another about 10% the next day. However, there was a little bit of selling on the Friday, and that's why we saw a bit of a tail to the up on that one-day candlestick. Now, in saying all this, even though there was a positive reaction over the last 2 trading days, there's a lot of resistance moving forward for Integrated Research because the share price was higher back in August of this year. You can see that nice little rally in the share price in the shares from June through to August. Now, that rally in the share price was on low volume, which is concerning. When you see the share price rising on low volume, that is telling us there's no strength. There's no willing participants in the market wanting to buy or even buying into the share price rally. And so it's not surprising to see after that rally came to an end, after all the buyers were exhausted, the share price fell and kept on falling to a new low. That low was just above 31 cents, and that was reached in the middle of November. So at this point in time, we need to see the share price get above 62.5 cents, which was the previous high we saw back in August. So we need that new high in the share price. This could be a step in the right direction from Integrated Research. Share price has taken a hammering over the past few years. And if you just looked at the value of this company right now, and if they can turn it around, this company would be looking really, really cheap. But the question is, can they turn it around? I think that's the major question with this company. Warren Buffett has said that turnaround stories seldom turn around. I don't exactly agree with that. I have seen quite a few turnaround stories, and maybe Integrated Research is the next turnaround story. And if it does turn around, I think this company is undervalued or significantly undervalued if they do turn around. That's all I have for this technical update, focusing on Kogan and 7 other companies on the ASX. If you have any questions, any thoughts, if you disagree with me, anything I've said in this video, I'd love to hear from you. So leave those thoughts in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. And I really need to burp, so I'm going to burp just as soon as I press the stop recording button.